Uncle Mike, I just got pulled over and the officer asked for my insurance card. I panicked because I'm not even sure what car insurance actually is. Like, why do I need it?
Jack, you just asked the most important question. Let's break this down. By the end of this conversation, you'll understand car insurance better than 90% of Americans.
Yeah, I'm confused too. My friend said it's a scam, but my dad says it's the law. Who's right?
Let me answer your questions one by one. Ready?
Uncle Mike, what actually car insurance is?
Car insurance is a contract. You pay a company money every month, and in return, they promise to cover your financial losses if something bad happens, like an accident, theft, or damage.
So, like a safety net?
Exactly. Think of it like a bet. You're betting something bad will happen, and the insurance company is betting it won't. Here's a real example. In 2021, a guy in Arizona accidentally crashed into a Ferrari. The repair bill? $380,000. His insurance paid it. Without insurance, he'd be bankrupt.
Wait, $380,000 for one accident?
Yup, that's why insurance exists. You can't predict disaster, but you can protect yourself financially.
Is car insurance mandatory in the United States?
In 49 out of 50 states, yes. Only New Hampshire doesn't require it, but even there, you're financially responsible if you cause an accident.
Uncle Mike, what does financially responsible mean?
It means if you crash into someone and cause $100,000 in damages, you have to pay out of your own pocket. Let me give you a real case. In 2019, a driver in Virginia, a state where you can legally drive uninsured if you pay a $500 fee, hit a school bus. The injuries cost $2.3 million. Guess what? He had no insurance. His wages were garnished for life.
For life?
Yup. So yes, it's mandatory in most states, but even where it's not, driving without it is financial suicide.
Mike, what happens if you drive without insurance in the USA?
Oh, it's way worse than just a ticket. Here's what happens. Immediate fine. $500 to $5,000 depending on the state. License suspension. Your license gets suspended for months. Car impounded. Police can tow your car on the spot. SR 22 requirement. You'll need high-risk insurance for 3+ years, which costs triple the normal rate.
Wait, triple?
Let me give you a real story. In 2020, a woman in California got pulled over for a broken taillight. She didn't have insurance. Here's what happened. $1,200 fine, 6-month license suspension, $450 to get her car out of impound, $3,000 per year for SR 22 insurance for 3 years. Total cost, over $10,000, all because she tried to save $150 per month on insurance.
That's insane. Exactly. The savings aren't worth the risk.
Uncle Mike, what is minimum car insurance coverage?
Every state sets a minimum liability coverage. It's usually written like this, 25/50/25. Let me decode it. $25,000 equals max payout for one person's injuries. $50,000 equals max payout for all injuries in one accident. $25,000 equals max payout for property damage.
Wait, so if I hit someone and their medical bill is $100,000, my insurance only pays $25,000.
It's legal, but it's a financial trap. Let me explain why in the next question.
What does liability insurance cover?
Liability means you are responsible. Liability insurance covers damages you cause to other people, not your own car or injuries.
Wait, so if I crash my car, my insurance doesn't fix it?
Not with liability only, no. Here's a real example. In 2020, a driver in Texas ran a red light and T-boned another car. The other driver's medical bills were $80,000 and their car repair was $15,000. The at-fault driver's liability insurance paid all of it. But his car totaled. His insurance paid $0 for his own car.
So liability is like, I clean up my mess, but not my own damage?
Exactly. That's why it's called liability. You're covering your legal responsibility to others.
Uncle Mike, what is full coverage car insurance?
Full coverage isn't an official term, but it usually means liability covers others. Collision covers your car in an accident. Comprehensive covers theft, vandalism, fire, etc.
So that fixes my car too?
Yes. Real example. In 2017, Hurricane Harvey flooded Houston. A guy had full coverage. His car was underwater. Total loss, worth $25,000. His comprehensive coverage paid the full amount. His neighbor, liability only, got $0.
So full coverage is always better?
Not always. It depends on your car's value.
Is full coverage worth it?
It depends. If your car is old and worth less than $3,000, full coverage might cost more than the car itself. Here's the rule. If your car's value is less than 10 times your annual premium, drop full coverage.
Can you give an example?
Sure. In 2021, a guy in Ohio had a 2005 Honda Civic worth $2,500. His full coverage cost $1,200 per year. He got in an accident. His car was totaled. Insurance paid him $2,500, but over 3 years, he'd paid $3,600 in premiums. He lost money.
So he basically insured a car that wasn't worth insuring?
Exactly. For old cars, liability only plus a savings account is smarter.
Uncle, how does car insurance work?
Simple. You buy a policy, monthly or yearly. You have an accident. You file a claim. Insurance investigates. They pay, minus your deductible.
Wait, what's a deductible?
Hold that thought. But here's a real example. In 2020, a woman in Nevada hit a deer. Her car had $8,000 in damage. She had a $500 deductible. So, insurance paid $7,500. She paid $500.
So I always have to pay something?
Only with collision and comprehensive claims. With liability claims against you, the other person gets paid directly.
Uncle Mike, why is car insurance so expensive in the USA?
Great question. 4 big reasons. Medical costs. ER visits in the US can cost $50,000 plus lawsuits. People sue for millions. Car repair costs. Modern cars have sensors, cameras, expensive tech fraud. Fake claims cost insurers $40 billion per year.
Can you give a real example?
Sure. In 2022, a Tesla Model 3 got rear-ended in California. Minor damage, just a cracked bumper. Repair cost, $18,000. Why? The bumper had sensors, cameras, and radar. Insurance had to pay. That's why premiums are high. Cars are basically computers now.
So we're paying for other people's expensive accidents?
Exactly. Insurance pools risk. Everyone pays, so the unlucky few can be covered.
What does car insurance not cover?
Good question. Insurance does not cover intentional damage if you purposely crash, wear and tear, engine dying from old age, mechanical failure, transmission breaking, racing or illegal activity, personal belongings, your laptop stolen from the car.
Wait, my stuff inside the car isn't covered?
Nope. Real example. In 2021, a guy in Colorado had his car broken into. Thieves stole $5,000 worth of camera equipment. His car insurance paid $0 for the cameras, only the broken window. He had to file a claim with his homeowner's insurance to get the cameras covered.
So car insurance only covers the car?
Mostly, yes. Your belongings are covered by renters or homeowners insurance, not car insurance.
Can I drive without insurance for one day?
Legally? No. Realistically? Also no. And here's why. Insurance isn't based on days. If you get caught or have an accident even for one day without coverage, you face the same penalties as if you'd been uninsured for months.
But what if I'm just driving to the DMV to register my car?
Doesn't matter. Real example. In 2019, a guy in Illinois bought a used car. He thought, I'll just drive it home and get insurance tomorrow. On the way home, literally 15 minutes later, he got rear-ended. The other driver's injuries cost $45,000. He had no insurance. He's still paying it off through wage garnishment.
15 minutes?
Yup. Insurance companies won't backdate coverage. The moment you drive, you're at risk. Some states even have electronic verification systems. Police can check your insurance status in real time during a traffic stop.
Uncle Mike, how fast can I get car insurance?
You can get coverage instantly, as in right now from your phone. Most major insurers offer immediate online quotes and same-day coverage that starts the moment you pay.
Wait, really? Like I could buy it in 10 minutes?
Absolutely. Real example. In 2020, a woman in Texas needed to buy a car at 8 p.m. The dealership required proof of insurance before she could drive off the lot. She pulled out her phone, got a quote from Geico, paid online, and received her insurance card via email in 12 minutes. She drove home legally insured that same night.
So there's no excuse for driving uninsured?
None. Zero. The I'll get it tomorrow excuse doesn't fly anymore.
What is a deductible?
Ah, the question I've been waiting for. A deductible is the amount you pay out of pocket before insurance kicks in. Think of it like this. Insurance doesn't pay for the first chunk of damage. You do.
So if I have a $1,000 deductible and $5,000 in damage,
You pay $1,000. Insurance pays $4,000. Real example. In 2021, a driver in Michigan backed into a pole. Damage, $3,200. His deductible, $1,000. So, he paid $1,000. Insurance paid $2,200.
Wait, so I'm paying insurance every month, and I have to pay more when I actually need it?
Nodding. Exactly. That's how they make money. And here's the kicker. You choose your deductible when you buy the policy.
is higher deductible better?
It depends on your finances. Here's the trade-off. Higher deductible equals lower monthly premium, but more risk. Lower deductible equals higher monthly premium, but less risk.
Can you explain with numbers?
Sure. Let's say you're choosing between $500 deductible equals $200 per month premium, $1,000 deductible equals $150 per month premium. You save $50 per month with the higher deductible. But if you have an accident, you pay $1,000 instead of $500. Real example. In 2020, a driver in Ohio chose a $2,000 deductible to save money. His premium was only $80 per month. Then he hit a deer. Repair cost, $6,500. He had to pay $2,000 up front before insurance covered the rest. He didn't have $2,000 saved. He put it on a credit card and paid 18% interest.
So higher deductible backfired?
Exactly. Rule of thumb. Only choose a high deductible if you have that amount saved in an emergency fund.
What is a premium?
Your premium is the price you pay for insurance, usually monthly, but you can pay every 6 months or annually. It's like a subscription. You pay to keep the coverage active.
So premium equals monthly payment?
Exactly. And here's what affects it. Your age, your car, your driving record, your location, your coverage level. Real example. In 2022, two identical 25-year-old guys in Texas bought the same car, a Honda Civic. One lived in Houston, high crime area, the other in a small town. Houston guy's premium, $180 per month. Small town guy, $95 per month. Same car, same driver profile. Location alone doubled the cost.
That's insane.
Zip code is one of the biggest factors insurance companies use.
Uncle Mike, what is a policy limit?
A policy limit is the maximum amount your insurance will pay for a claim. Remember that 25/50/25 minimum coverage I mentioned? Those are policy limits.
So if my limit is $25,000 and the damage is $100,000?
You're personally responsible for the extra $75,000. Real example. In 2018, a driver in California with a 1535 policy, super low limits, caused a 3-car pileup. Total medical bills and property damage? $220,000. His insurance paid $15,000 for one person's injuries, $30,000 total for all injuries, combined $5,000 for property damage. He was sued for the remaining $170,000. His house was put at risk.
They can take your house?
Absolutely. That's why low policy limits are dangerous. Most experts recommend at least 100/300/100 coverage.
What is uninsured motorist coverage?
This covers you if you're hit by someone who has no insurance. Remember, 1 in 8 drivers in the US is uninsured. Without this coverage, you're screwed if they hit you. Wait, so even if it's not my fault, I need extra coverage? Yup. Real example. In 2020, a woman in Florida was T-boned by an uninsured driver running a red light. Her medical bills were $60,000. The other driver had no insurance and no assets, couldn't be sued for anything. Luckily, she had uninsured motorist coverage. Her own insurance paid the $60,000. Without it, she'd be bankrupt.
So I'm paying to protect myself from other people's mistakes?
Exactly. Welcome to America. Uncle Mike, what is underinsured motorist coverage? This is similar, but it covers you when the at-fault driver has insurance, but not enough. Remember those minimum coverage limits? Lots of people only carry the bare minimum.
Can you give an example?
Sure. In 2021, a driver in Georgia was hit by someone with minimum coverage, 25/50/25. The medical bills were $80,000. The at-fault driver's insurance paid $25,000. That's their policy limit. The victim had underinsured motorist coverage, so his insurance paid the remaining $55,000. Without it, he'd have to sue the other driver personally, who had no money. So even if someone has insurance, it might not be enough? Exactly. That's why this coverage exists.
Does car insurance cover rental cars?
Usually, yes, but with conditions. If you have full coverage, liability plus collision plus comprehensive, it typically extends to rental cars in the US. But you need to check your policy. Uncle Mike, what about that insurance the rental company offers? That's usually unnecessary if you already have full coverage. Real example. In 2019, a guy rented a car in Nevada. He declined the rental company's insurance, $35 per day, because he had full coverage on his personal car. He got in an accident, $8,000 in damage. His personal insurance covered it, minus his $500 deductible. He saved $245 by not buying the rental insurance for a 7-day trip.
So rental insurance is a scam?
Not always. If you only have liability coverage on your personal car, you should buy the rental insurance, because your liability-only policy won't cover damage to the rental car itself. Does insurance follow the car or the driver? Great question. In most cases, insurance follows the car, not the driver. This means if someone borrows your car and crashes it, your insurance pays, not theirs.
Wait, so if I lend my car to a friend and they crash it, my insurance is affected?
Exactly. Real example. In 2020, a woman in Oregon lent her car to her cousin. The cousin ran a stop sign and caused $40,000 in damages. The woman's insurance had to pay.
Her premium went up by $600 per year for the next 3 years, costing her $1,800 total, even though she wasn't driving.
So I should never lend my car?
Be very careful who you lend it to. There are exceptions, like if the borrower is explicitly excluded from your policy, or if they stole the car. But generally, your car equals your insurance equals your problem.
This is getting complicated.
And we're just getting started. Because here's the thing most people don't realize. Insurance companies are very good at finding reasons to deny your claim or raise your rates. And there are specific situations where you think you're covered, but you're not.
Like what?
Serious look. Well, for example, what happens if someone crashes your car? Or what if you're driving someone else's car? Who pays then?
I don't know.
Leaning forward. Exactly. And if you don't know the answer, you could end up paying thousands out of pocket. Let me explain. So now you understand that insurance follows the car, not the driver. But this creates some really messy situations that most people never think about until it's too late.
Can I insure a car not in my name?
Let me walk you through the scenarios that confuse everyone.
Can I insure a car not in my name?
Technically, it's difficult. Most insurance companies require you to have an insurable interest in the car, meaning you either own it, co-own it, or are the registered owner. They won't let you insure someone else's car.
Why not?
Because of fraud. If you could insure random cars, people would insure expensive cars they don't own and then file fake claims. Real example. In 2018, a guy in New York tried to insure his girlfriend's BMW in his own name. The insurance company rejected it because the title wasn't in his name. When she later crashed the car, she had no coverage because she thought he had insured it. The repair cost $15,000, all out of pocket.
So what should they have done?
Either put him on the title as a co-owner or add him to her insurance policy as a listed driver. There are workarounds, but you can't just insure any random car.
Can someone else drive my car?
Yes, but your insurance covers them as long as they have your permission and a valid license. This is called permissive use. However, there are limits.
What kind of limits?
Most policies allow occasional permissive use, like letting a friend borrow your car for a day. But if someone drives your car regularly, they need to be listed on your policy. Real example. In 2019, a college student in Michigan let his roommate borrow his car occasionally to get to work. After 3 months, the roommate crashed it, $25,000 in damages. The insurance company investigated and found text messages proving the roommate used the car 5 days a week. They denied the claim, saying the roommate should have been a listed driver. The student had to pay the $25,000 himself.
So, occasional has a limit?
Exactly. If someone uses your car more than 10 to 12 times a month, most insurers consider that regular use and require them to be listed. Always check your policy.
Uncle Mike, what happens if someone crashes my car?
If they had your permission, your insurance is primary, meaning your insurance pays first, and your rates might go up. If they didn't have permission, like if they stole it, then your insurance should still cover it under comprehensive coverage, but you'd need to file a police report.
Uncle Mike, what if my friend was driving and they have their own insurance?
Your insurance still pays first. Their insurance might kick in if damages exceed your policy limits, but your policy is primary. Real example. In 2020, a woman in Texas lent her car to her brother. He caused a $90,000 accident. Her policy limit was $50,000. Her insurance paid $50,000. His insurance paid the remaining $40,000 as secondary coverage, but her premium went up $1,200 per year for 3 years, costing her $3,600 total. She stopped talking to her brother.
I would too.
Moral of the story. Think twice before handing over your keys.
So, if I move to another state, my insurance changes?
Absolutely. Every state sets its own minimum coverage requirements, laws, and even how claims are handled. Some states are no fault, others are at fault. Some require PIP coverage, others don't.
Can you give an example?
Sure, in Michigan, until recently, drivers were required to carry unlimited personal injury protection, meaning if you caused $5 million in medical bills, your insurance had to pay all of it. Michigan had the highest insurance rates in the country, average $3,000 per year. Meanwhile, in Virginia, you can legally opt out of insurance entirely by paying a $500 fee. Same country, totally different rules.
Wait, so even if someone hits me, my insurance pays?
Yup, you usually have 30 to 90 days to update your policy when you move. Real example. In 2021, a guy moved from Ohio, cheap insurance, to Michigan, expensive insurance. His premium went from $1,200 per year to $3,400 per year. Same car, same driving record, just a different zip code.
So if I move to another state, my insurance changes?
Location is everything in insurance pricing.
That's crazy.
In no-fault states, your own insurance pays for your medical bills after an accident, regardless of who caused it. You don't sue the other driver for medical costs. You file a claim with your own insurer.
Does that make insurance more expensive?
Exactly. Currently, about 12 states use no-fault systems, including Florida, Michigan, and New York. The idea is to reduce lawsuits and speed up claims. Real example. In 2019, a driver in Florida was rear-ended at a red light. Clearly not her fault. Her medical bills were $20,000. Under Florida's no-fault law, her insurance paid her medical bills through her PIP, personal injury protection coverage. She couldn't sue the other driver for medical costs unless her injuries were serious, like permanent disability. However, she could still claim property damage from the at-fault driver's insurance.
Uncle Mike, what is no-fault insurance?
Exactly. It's weird, but that's how no-fault works. Some people love it because claims are faster. Others hate it because even if you're 100% innocent, your own insurance handles your medical bills.
So, how much does car insurance cost in the USA?
Usually, yes. No-fault states tend to have higher premiums because insurers have to pay out more often. All right, so now you understand the basics. What insurance is, how coverage works, who's covered when. But here's the question everyone really cares about.
So I pay for my injuries, they pay for my car?
Exactly. And more importantly, why is it so expensive, and how can you pay less? Let me break down the money side of insurance.
That's more than double.
On average, Americans pay about $1,700 to $2,400 per year for full coverage, or roughly $140 to $200 per month. But that's just the average. It varies wildly based on your state, age, car, and driving record.
How much does it cost?
Cheapest states like Maine or Ohio, you might pay $900 per year. Most expensive, like Michigan, Louisiana, or Florida, you could pay $3,500 to $4,500 per year. Real example. In 2022, a 25-year-old in Vermont with a clean record paid $1,100 per year for full coverage on a Honda Accord. His identical twin brother moved to Louisiana. Same car, same record. His premium? $3,800 per year. That's $2,700 more per year just because of location.
Wait, credit score affects insurance? How is that fair?
Exactly. Insurance companies calculate risk based on where you live, and some states are just more expensive to insure in.
What's the range? Like, cheapest to most expensive?
Great question. Your premium is based on dozens of factors, but here are the big ones. Age. Young drivers, under 25, pay the most. Driving record. Accidents and tickets increase rates. Credit score. Bad credit equals higher rates. Location. High crime or accident-prone areas cost more. Car type. Sports cars and luxury vehicles are expensive. Coverage level. Full coverage costs more than liability only.
Uncle Mike, how can I lower my car insurance?
Insurance companies claim people with bad credit file more claims, statistically. Real example. In 2020, two identical 30-year-old women in Arizona applied for the same coverage. One had a credit score of 780, the other 580. The high credit woman paid $1,400 per year. The low credit woman, $2,600 per year, nearly double, just because of credit score.
Why is my car insurance so high?
Some states have banned this practice, but most still allow it. Always check your credit before shopping for insurance.
So, loyalty doesn't pay?
Here are the top strategies. Increase your deductible, but only if you can afford it. Bundle policies. Combine auto plus home/renters. Ask for discounts. Good student, military, safe driver, etc. Drive less. Low mileage discount. Improve your credit score. Take a defensive driving course. Shop around every year.
That's insane!
Sure. In 2021, a guy in Colorado was paying $2,200 per year with State Farm. He spent 2 hours shopping around and found the same coverage with Progressive for $1,400 per year, saving $800 just by switching. Then he bundled his renter's insurance and saved another $200. Total savings? $1,000 per year for 2 hours of work. That's $500 per hour.
Uncle Mike, how much more do teens pay?
Nope. Insurance companies often raise rates on loyal customers because they assume you won't shop around. Always compare quotes annually.
Uncle Mike, how can I lower my car insurance?
Massively. Teenagers and young adults, 16 to 25, pay the highest rates because statistically, they cause more accidents. Rates drop significantly around age 25, then gradually decrease until about age 65 to 70, when they start creeping back up.
Does gender affect car insurance?
A lot. Real example, in 2022, a 16-year-old in Georgia with a clean record was quoted $6,800 per year for full coverage on a used Honda Civic. His 30-year-old father with the same car and same coverage, $1,400 per year. The teen paid nearly 5 times more just because of age.
Can you give a real example?
Insurance companies see young drivers as high risk. In fact, adding a teen driver to a family policy typically increases the premium by 50 to 100%. But there are ways to reduce it. Good student discounts, defensive driving courses, and being listed on a parent's policy instead of getting their own.
Is that legal? Sounds like discrimination.
Yes, in most states. Statistically, young men, especially under 25, cause more severe accidents than young women, so they pay higher rates. However, the gap shrinks significantly after age 25.
Does age affect car insurance?
Real example. In 2021, a 20-year-old man in Texas was quoted $3,200 per year for full coverage. A 20-year-old woman with an identical profile? $2,600 per year. That's a $600 per year difference just because of gender. However, by age 30, the gap narrowed to about $100 to $200 per year.
That seems really unfair.
Some states have banned it. California, Hawaii, Massachusetts, Michigan, North Carolina, and Pennsylvania don't allow gender-based pricing. But in most states, it's legal because it's based on statistical risk analysis, not discrimination. Insurance is all about statistics.
That's brutal.
Welcome to insurance. You're not judged as an individual. You're judged based on your risk category. Age, gender, location, car type. They put you in a box and price you accordingly.
I still don't get why my credit matters. I'm not borrowing money from the insurance company.
It is. But here's what's even more unfair. How insurance companies use your credit score to determine your rates. Most people don't even know this is happening, and it can cost you thousands.
Uncle Mike, how much of a difference are we talking?
So you want to know how your credit score affects your insurance? Buckle up, because this is where things get really frustrating for most people.
But how is that fair? My credit has nothing to do with my driving.
Exactly. That's what makes it controversial. Let me break it down.
So I'm being punished for what other people my age and gender do?
In most states, yes, and the impact is huge. Insurance companies use what's called a credit-based insurance score. They claim that people with lower credit scores statistically file more claims.
That's insane.
You're absolutely right, but insurance companies don't care. Real example. In 2021, Consumer Reports did a study. They found that a driver with poor credit, score around 580, paid an average of $2,900 per year. The same driver with excellent credit, score around 800, only $1,400 per year. That's a $1,500 per year difference, or $125 per month, just because of a credit score.
Wait, you mentioned credit score earlier. How exactly does that work?
Sometimes more than double. In 2020, a single mom in Nevada with a 550 credit score was quoted $4,200 per year. She worked on improving her credit, paid off debts, disputed errors. 2 years later, her score hit 720. She requoted with the same company for the same coverage. New price? $1,800 per year. She saved $2,400 just by fixing her credit.
Has anyone challenged this?
It's legal in most states, though. Only California, Hawaii, Massachusetts, and Michigan have banned the practice.
Uncle Mike, why are they so cheap?
Insurance companies lobbied for it. They argued that credit-based insurance scores are predictive of risk, meaning people with low credit scores are statistically more likely to file claims. Whether that's actually true or just correlation is debatable.
So someone with bad credit pays double?
Think about it. People with low credit often face financial stress. Maybe they can't afford car maintenance, so their brakes fail. Or they live in higher crime neighborhoods because rent is cheaper. The insurance companies say it's about responsibility, but critics say it's just another way to charge poor people more money.
Uncle Mike, what state has the most expensive car insurance?
Yes, real example. In 2019, Maryland tried to ban credit-based insurance scoring. The insurance industry fought back hard, spending millions on lobbying. The ban failed. As of now, only 4 states prohibit it. Everywhere else, your credit score affects your premium, whether you like it or not.
Uncle Mike, what do you mean?
Monitor your credit, dispute errors, and shop around. Some companies weigh credit scores more heavily than others. If you have bad credit, get quotes from companies that focus less on credit, like the General or Direct Auto.
So what can people do?
As of recent data, the cheapest states are typically Maine, Ohio, Idaho, Vermont, and New Hampshire. Average annual premiums in these states run around $900 to $1,200 per year for full coverage.
That's highway robbery.
Low population density, fewer accidents, less traffic, lower crime rates, and fewer uninsured drivers. Real example, in 2022, a 30-year-old in Vermont with a clean record and a Honda Accord paid $985 per year for full coverage with $500 deductibles. That same driver in Louisiana, $3,650 per year, nearly 4 times more.
Uncle Mike, what state has the cheapest car insurance?
Only if you like cold winters and maple syrup. But yes, location is the single biggest factor you can't control. Where you live determines your base rate.
How much of a difference does it make?
Historically, Michigan, Louisiana, Florida, and New York have been the most expensive. Michigan used to be the most expensive because of unlimited personal injury protection requirements, but they reformed the law in 2020.
So if I want cheap insurance, I should move to Vermont?
Real example. In 2019, before Michigan's reform, drivers in Detroit paid an average of $5,400 per year. Some paid over $10,000 per year. A teacher in Detroit was paying $450 per month just for liability coverage on a 2010 Chevy Malibu. She was spending more on insurance than her car payment.
Is monthly car insurance more expensive?
It was. The 2020 reform gave people options to cap their PIP coverage, and rates dropped. But Louisiana and Florida are still brutal. Louisiana averages around $2,800 to $3,200 per year because of high uninsured driver rates, frequent hurricanes, and lots of lawsuits. Florida is similar, lots of fraud, hurricanes, and uninsured drivers.
How expensive are we talking?
Absolutely. Natural disasters, theft rates, accident rates, all of it factors into your zip code's risk profile.
So weather and crime affect insurance?
Yes, almost always. Paying annually typically saves you 5 to 10% compared to monthly payments. Insurance companies prefer lump sum payments because they get their money up front and don't have to process 12 separate transactions.
That's a scam.
Real example. In 2021, a driver in Arizona was quoted $1,800 per year if paid in full, or $165 per month if paid monthly. Let's do the math. Annual payment, $1,800. Monthly payment, $165 times 12 equals $1,980. He saved $180 just by paying up front. That's a 10% discount.
Is car insurance cheaper if paid annually?
That's the catch. Most people can't afford to pay annually, so they end up paying more over time. It's expensive to be poor. If you can swing it, even paying every 6 months, semi-annually, usually offers some discount, typically 3 to 5%.
Do people really save money by switching?
Yes, for 2 reasons. First, as I just mentioned, you miss out on the annual payment discount. Second, some companies charge installment fees, basically charging you extra for the privilege of paying monthly.
But what if I don't have $1,800 sitting around?
Yup, real example. In 2020, a driver in Illinois chose monthly payments with Allstate. His annual premium was $1,600, but Allstate charged a $5 installment fee every month. So, annual cost, $1,600 divided by 12 equals $133.33 per month base, plus $5 fee equals $138.33 per month. Total annual cost, $1,660. He paid an extra $60 per year just in installment fees.
So I should never stay with the same company?
It's legal though. Not all companies charge installment fees, but many do. Always ask about fees before choosing monthly payments. Some companies like Geico and Progressive don't charge installment fees, but others like Allstate and Farmers often do.
Wait, they charge fees just for monthly payments?
At least once a year, ideally when your policy is up for renewal. Insurance companies often raise rates on loyal customers, betting you won't notice or won't bother shopping around.
Uncle Mike, why did my car insurance go up?
Absolutely. Real example. In 2022, a couple in Tennessee had been with State Farm for 8 years. Their premium had crept up from $1,400 per year to $2,100 per year. They didn't even notice the gradual increases. One day, they got quotes from 5 other companies. Progressive offered the same coverage for $1,350 per year. They switched and saved $750 just like that.
Uncle Mike, how often should I shop for insurance?
In a way, yes. They call it price optimization. They charge you what they think you'll tolerate, not what's fair. New customers get discounts. Loyal customers get rate hikes. It's backwards, but that's the game.
That doesn't seem fair.
Not necessarily. Some companies do reward loyalty with accident forgiveness or disappearing deductibles. but you should always shop around annually to make sure you're getting a competitive rate. Set a calendar reminder every year.
Can you give an example?
There are several reasons. You filed a claim, even if not at fault. You got a ticket or accident on your record. Your credit score dropped. You moved to a higher risk zip code. Your car got older. Depreciation sometimes increases theft risk. Industry-wide rate increases, inflation, more claims, natural disasters. You turned a certain age, rates can increase after 70.
So insurance companies punish loyalty?
They need a reason, but it doesn't have to be your fault. Real example. In 2021, a woman in Texas had the same car, same address, no accidents, no tickets. But her premium went up 15%. Why? Her insurance company, Allstate, filed for a statewide rate increase, claiming higher repair costs due to inflation and supply chain issues. The state approved it. She didn't do anything wrong, but her rate went up $240 per year anyway.
Is there any way to avoid this?
It's not, but it's legal. Insurance companies can request rate increases from state regulators, and if approved, everyone in that state with that company gets hit. That's why shopping around matters. Other companies might not have raised rates.
Can they raise rates for no reason?
Absolutely. When inflation rises, so do car repair costs, medical costs, and replacement part costs, which means insurance companies pay out more per claim. They pass those costs on to you.
Is car insurance cheaper for married people?
Sure. Real example. In 2019, replacing a side mirror on a Honda Accord cost about $300, parts plus labor. By 2023, the same repair costs $650, more than double. Why? Newer cars have cameras, sensors, and blind spot detection in the mirrors. Add in inflation for labor costs, and repairs skyrocketed. Insurance companies saw their claim payouts jump 30 to 40% from 2020 to 2023. They responded by raising premiums across the board.
Does inflation affect car insurance?
Exactly. Cars are safer, but much more expensive to repair. A fender bender that cost $2,000 to fix in 2015 now costs $5,000 to $6,000. Insurance companies adjust premiums to match.
Wait, so getting married saves you money on insurance?
Not really. Inflation affects everyone. The best you can do is shop around for competitive rates and increase your deductible to lower your premium.
Great. So insurance punishes you for being young, single, and poor.
Yes, typically. Married people statistically have fewer accidents and file fewer claims than single people. Insurance companies see marriage as a sign of stability and reward it with lower rates.
So we're paying for expensive car technology?
Real example. In 2022, a 28-year-old single man in Ohio paid $2,100 per year for full coverage. He got married, updated his policy, and his rate dropped to $1,650 per year, saving $450 just by getting married. Same car, same driving record, just a different marital status.
Uncle Mike, what kind of mistakes?
Among other things, yes. Bundling policies with a spouse, combining two cars on one policy, saves even more. In fact, a married couple with two cars on one policy often pays less combined than two single people with separate policies.
How much cheaper?
In a way, yes. They also give discounts for homeownership, good credit, and stable employment. Basically, they reward anything that suggests you're a responsible adult. Single, renting, bad credit, you pay more. Married, homeowner, good credit, you pay less.
How much difference does it actually make?
Essentially, yes. But here's the thing. Even if you can't control some factors, like your age or marital status, there are still ways to game the system and pay less. You just have to know the tricks.
So insurance companies encourage marriage?
Well, for starters, do you own a home or rent? Because that affects your rate more than you think. And there are other things, like bundling, mileage, student discounts, that can save you hundreds. Let me walk you through the money-saving strategies that actually work, so you understand that married people and homeowners get better rates. But why? And more importantly, how much coverage do you actually need? Because this is where people make expensive mistakes.
So buying a house saves you money on car insurance.
Let me show you.
Like what?
Yes, usually by 5 to 15%. Insurance companies see homeowners as more financially stable and responsible than renters. Plus, if you bundle your home and auto insurance with the same company, you get an additional multi-policy discount.
So bundling always saves money?
Real example. In 2021, a 35-year-old renter in North Carolina paid $1,800 per year for auto insurance with State Farm. He bought a house and bundled his homeowner's insurance with his auto policy. His new combined rate, auto insurance, $1,450 per year, was $1,800. Homeowner's insurance, $1,200 per year. Total, $2,650 per year. If he'd kept them separate, he would have paid around $3,200 per year total. He saved $550 per year just by bundling.
Is car insurance cheaper for homeowners?
Indirectly, yes. But even if you rent, you can bundle renter's insurance, which is cheap, usually $15 to $30 per month, with your auto policy and still get a discount. In 2020, a woman in Oregon added a $20 per month renter's policy to her auto insurance and got a $180 per year discount on her auto premium. She spent $240 per year on renter's insurance, but saved $180 on auto. Net cost only $60, plus she had renter's coverage.
Uncle Mike, how much insurance do I really need?
Usually, but not always. Sometimes an unbundled policy from two different companies is cheaper overall. Always compare total costs, not just the discount percentage.
So 100 over 300 wasn't enough.
This depends on your assets and risk tolerance. Here's the rule of thumb. Minimum. Your state's required liability limits, but this is risky. Recommended, at least 100/300/100 liability coverage. If you have assets, enough to cover your net worth, or get an umbrella policy.
So bundling always saves money?
$100,000 per person for injuries, $300,000 total per accident, and $100,000 for property damage. Real example. In 2020, a driver in Colorado caused a multi-car accident. Medical bills totaled $450,000. He had 100 over 300 over 50 coverage. Here's how it broke down. Person 1 injuries, $180,000. Insurance paid $100,000 max per person. He owed $80,000. Person 2 injuries, $120,000. Insurance paid $100,000. He owed $20,000. Person 3 injuries, $150,000. Insurance paid $100,000. He owed $50,000. Total he owed out of pocket, $150,000. His insurance maxed out at $300,000 total. He declared bankruptcy.
How bad is minimum coverage?
For a major accident? No. That's why high net worth individuals carry 250/500/100 or even 500/500/100 coverage. Or they buy umbrella insurance, which adds an extra $1 to $5 million in liability coverage for about $200 to $500 per year.
Uncle Mike, what does 100 over 300 over 100 mean again?
Legally, yes. Financially, almost never. Minimum coverage is designed to meet legal requirements, not to actually protect you.
So what should people have?
Most states require something like 25/50/25 or 15/30/5. That's laughably low in 2024. Real example. In 2019, a driver in Alabama with minimum coverage, 25/50/25, Rear-ended an SUV carrying a family of 4. The medical bills. Driver, $85,000. Neck surgery. Passenger 1, $40,000. Broken ribs. Passenger 2, $25,000. Concussion. Passenger 3, $15,000. Whiplash. Total, $165,000. His insurance paid $50,000 total, the max under 25/50 coverage. He personally owed $115,000. The family sued. He lost his house.
Is minimum insurance enough?
Yup. Medical costs in the US are insane. A single ER visit can cost $50,000. An ICU stay? Hundreds of thousands. Minimum insurance is like bringing a squirt gun to a forest fire. It's not enough.
Uncle Mike, how much liability coverage should I have?
At minimum, 100 over 300 over 100. If you own a home or have significant savings, go higher or get an umbrella policy.
They took his house?
A good rule: carry liability coverage at least equal to your net worth. If you're worth $200,000, home equity, savings, retirement accounts, carry at least 250/500/100 coverage.
Over one accident?
Because if you cause a major accident and get sued for more than your insurance covers, they come after your assets, your house, your savings, your wages. Real example, in 2018, a man in New Jersey with $300,000 in home equity had only 50 over 100 over 50 coverage. He caused a crash that resulted in $600,000 in medical bills. His insurance paid $100,000. He was sued for the remaining $500,000. He had to sell his house to settle the lawsuit.
Uncle Mike, how much do accidents increase rates?
Not directly, but he had to sell it to pay the settlement. That's why you need enough coverage to protect your assets. For most people, net worth under $100,000, 100 over 300 over 100 is fine. Net worth $100,000 to $500,000. Go for 250 over 500 over 100. Net worth over $500,000. Get 500 over 500 over 100. Plus a $1 to $2 million umbrella policy.
Why my net worth?
Not as much as you'd think. In 2021, a driver in Virginia had 50/100/50 coverage for $1,200 per year. He upgraded to 250/500/100. His new premium? $1,380 per year. Only $180 more for 5 times the coverage. Meanwhile, an umbrella policy adding $1 million in extra liability cost him just $250 per year. Total extra cost, $430 per year for massively better protection.
How much does higher coverage cost?
Absolutely. Your driving record is one of the biggest factors in your premium. Clean record, low rates. Accidents and tickets, your rates skyrocket.
So one mistake follows you for years?
Real example. In 2020, a 30-year-old in Missouri with a clean record paid $1,400 per year. He caused an at-fault accident with $8,000 in damages. At renewal, his rate jumped to $2,100 per year, a 50% increase. That extra $700 per year lasted for 3 years, costing him an extra $2,100 total.
Does driving history affect cost?
Speeding tickets typically increase rates by 15 to 30% depending on severity. Real example, in 2019, a woman in Pennsylvania got a speeding ticket 15 miles per hour over. Her premium went from $1,200 per year to $1,560 per year, a $360 increase. That ticket stayed on her record for 3 years, costing her an extra $1,080 total. A $150 ticket ended up costing her over $1,000 in insurance increases.
How long do accidents affect insurance?
Yup, major violations like DUI, Your rates can triple or quadruple.
Uncle, what if I switch insurance companies? Does the accident follow me?
Typically 3 to 5 years, depending on the state and insurance company. Most accidents stay on your record and affect your rates for 3 years. But some companies look back 5 years.
What about tickets?
From your insurance pricing, yes, but it stays on your driving record longer. Real example. In 2017, a driver in California had an at-fault accident. His rates increased by $900 per year. Here's how it played out. 2017 to 2020. Paid extra $900 per year equals $2,700 total, 2020. Accident fell off his insurance record 2020 onward. Rates returned to normal, but the accident stayed on his DMV record for 7 years. It just didn't affect insurance pricing after year 3.
What if I take traffic school?
Yes. All insurance companies check your CLUE report, Comprehensive Loss Underwriting Exchange, a database that tracks your claims history. You can't escape it by switching companies.
How long do tickets affect insurance?
Usually 3 years from the violation date, though some minor violations might only affect you for 1 to 2 years, depending on the company.
Is insurance cheaper for older cars?
Good question. In many states, completing traffic school can keep the ticket off your record, which means it won't affect your insurance. Real example. In 2021, a guy in California got a speeding ticket. He had 2 choices: pay the fine, $250, and let it go on his record. Arrow insurance increases $400 per year for 3 years equals $1,200 total cost. Pay the fine plus traffic school, $250 plus $75, and keep it off his record. Arrow, $0 insurance increase. He chose option 2, saving $875 by spending 1 Saturday in traffic school.
So traffic school is always worth it?
Almost always, yes, if your state allows it and your insurance company honors it. Always ask your insurer before taking traffic school to confirm it'll prevent a rate increase.
So when should you drop full coverage?
It depends. Liability-only insurance is usually cheaper for older cars because the car has less value. But full coverage on an old car might not make financial sense.
Can you explain?
Sure. Real example. In 2020, a guy in Wisconsin had a 2008 Honda Civic worth $3,500. His full coverage, liability plus collision plus comprehensive, cost $1,400 per year with a $500 deductible. He got into an accident. His car was totaled. Insurance paid him $3,500 minus his $500 deductible equals $3,000. But he'd been paying $1,400 per year for 3 years equals $4,200 total. He actually lost money by having full coverage.
Uncle Mike, how much more expensive?
General rule: if your car's value is less than 10 times your annual premium, drop collision and comprehensive. Keep liability, it's required, but drop the rest and put that money in a savings account.
Uncle Mike, what about theft? Old cars get stolen too.
True, but comprehensive coverage on a $2,000 car might cost $400 per year. Over 5 years, that's $2,000, the same as the car's value. You're better off self-insuring.
Is insurance cheaper for new cars?
No, it's usually more expensive because higher value equals higher comprehensive and collision coverage. More expensive to repair, newer technology. Lenders require full coverage if you're financing. But some new cars qualify for safety discounts.
Why are sports cars expensive to insure?
Real example, in 2022, a 30-year-old in Ohio compared insurance quotes. 2015 Honda Accord, worth $12,000, $1,100 per year full coverage. 2023 Honda Accord, worth $32,000, $2,200 per year full coverage. Same driver, similar car, but the new one costs double to insure because of the higher replacement value.
Do safety features help?
Yes, new cars with automatic emergency braking, lane departure warning, and blind spot monitoring can qualify for 5 to 10% discounts. But those discounts don't usually offset the higher base cost. In 2021, a woman bought a new Toyota RAV4 with tons of safety tech. She got a 7% safety discount, dropping her premium from $2,000 to $1,860. Still way higher than insuring an older car.
What if you drive carefully? Can you prove you're not a risk?
3 reasons. Higher speed equals higher risk of severe accidents. Expensive to repair, specialized parts, labor. Theft targets. Sports cars are stolen more often. Insurance companies price based on statistics, and sports cars statistically cause more expensive claims.
Uncle Mike, how much more expensive are we talking?
Huge difference. Real example. In 2021, a 25-year-old in Florida compared quotes for 2 cars. Honda Civic, 4-cylinder sedan, $2,400 per year. Ford Mustang GT, V8 sports car, $4,800 per year. Same driver, same coverage. The Mustang costs double just because it's classified as a sports car.
This is all so complicated. I feel like insurance companies make it confusing on purpose.
Some companies offer usage-based insurance where they track your driving with an app or device. If you drive safely, you can earn discounts. But even then, the base rate for a sports car is higher. Real example. In 2020, a guy in Texas had a Corvette. He signed up for Progressive's Snapshot program, tracks your driving. He drove perfectly, no hard braking, no speeding. He earned a 15% discount, dropping his premium from $3,600 per year to $3,060 per year. He saved $540, but that's still way more than he'd pay for a regular sedan.
So sports cars are a luxury in more ways than one?
Exactly. You pay more to buy them, more to maintain them, more to fuel them, and more to insure them. But if you love cars, sometimes it's worth it. You just need to budget accordingly.
Mike, what do you mean?
Serious look. You're not wrong. The insurance industry thrives on complexity. Most people don't understand their policies, so they either overinsure and waste money, or underinsure and risk financial ruin. But here's the good news. Once you understand the different types of coverage available, you can make smart choices and stop overpaying.